The Edgeless Horseman here. It's March the 17th. It's technically the 18th here in Sweden. 2025. First video in quite a while. Reason for that is, I was first at PDAC. It's always kind of overwhelming. It's basically a zoo, and having to speak English and concentrate for a week or so, it kind of it takes a lot of energy. And after that, I got home, and like per usual, I got sick. And I talked to a lot of people. They also got sick from PDAC. There's people sneezing and coughing all over the place, and on the way there and on the way back, I basically didn't sleep for 30 hours or so. So if there's a time to be sick, it's when you haven't slept in 30 hours and basically shook the hands of 100 people per day. Anyway, I'm back in the saddle. First of all, thanks to the sponsors. I'm just gonna go through a few news items or posts or whatever, and then go into some companies. First of all, this is just great. It's kind of going, somewhat viral. You can really tell that the sentiment is going up. Not too long ago, maybe 6 months ago, regardless almost what you posted or tweeted, could be 4 likes or something. It's like nobody was in the sector, nobody cared at all. Now you see anybody talking about gold, it's like 200 likes and stuff like that. So it's pretty apparent that sentiment is getting better, and there's this sector is getting more eyes. I'm not really seeing that show up in the juniors in like a shotgun approach. We see the majors, they're performing. I think NICU is at a new all-time high. Larger miners are probably doing really, really well, but it's quite a threshold to go from a novice, like not initiated in the sector, and it's like immediately digging down and finding, let's say, the actually good juniors that we try to invest in. That's how do you even recognize what a good junior is compared to a bad junior? That's kind of hard. So it's still, I would say, a buyer's market overall. It's gold juniors especially. They're the better ones. They're still kind of dirt cheap. It's almost like gold being at 3,000 is a secret to Mr. Market, even obviously though it's not. You can't really complain from a buyer's perspective. It's just that it's so dumb that I feel like I'm going insane almost. And of course, the crypto hopium is still not out. Crypto is still around. It's gonna be like always, I was gonna say, there's so many people and accounts who have their whole identity tied and their net worths tied to crypto. So those people are probably gonna go down with the ship. Nobody's actually gonna think they made a mistake, or maybe it's not such a good idea anymore and all that. It's like, no, hey, if the only thing I ever invested in really is like Bitcoin or crypto, and I made some money early on maybe in it, even if I'm down, it's like you never learn to invest anyway. So it's like, what are the options? Are you all of a sudden gonna start to buy the US stock market, for example, which is overvalued? No, I don't think so. You're gonna try to. It's like I think Rick Rulis said as much. And other people as well, and the same goes for poker. That I can basically confirm myself. I mean, the worst thing almost is that if you're lucky in the beginning, if you have, immediately you're in a bull market, let's say. Because in poker, I remember quite early on, I had kind of a run and made some money, and it's like more money than I'd ever had. And I took huge amount of risks, probably ran hot for a while there, meaning like I had positive variance. I won more hands than I should. So that was kind of, quote, easy money. Similar in a sense, I guess, to crypto, because back then when I played poker, I had no idea what I was. Well, I mean, everybody was crap back then, but I wasn't that good either, and certainly I couldn't keep myself from tilting. If I had a bad night, I would. There was one night when I put everything I had on the table, doubled up, and went to bed. So, but if you tasted easy profits, easy returns, easy gains, it's very, very, very hard to do something else. You're gonna keep basically grinding until either you're basically bust or you actually learn how to, not only gamble, let's say. I think that's going to be hard for a lot of in the crypto space, especially in a sense, because by definition, crypto is, well, like 99.99% of the crypto at least. It's pure speculation. There's no underlying value anyway, so it's like that's not really a good. I mean, if you love crypto, are you suddenly gonna love thinking or caring about fundamentals all of a sudden, and the dislocating price from said fundamentals? I'm not sure about that. So I think it's gonna take take some time real to kill off the crypto sector, even if it's if the top is already in. I mean, because again, there's so many people. There's accounts with hundreds of thousands of followers or millions of followers, and the only thing they kind of do is pump crypto and Bitcoin. So I mean that's their whole kind of business thing, their whole shtick in a sense. I mean, if they have 600,000 followers being Bitcoin maxes, what are they gonna do when Bitcoin is not a thing anymore? I mean, then it would become quite irrelevant. So I mean, obviously you're gonna be fighting teeth and nail to try to wake up Bitcoin and have it stick around. So yeah, anyway, but I just love this from Peter Schiff here. Gold is not limited, Bitcoin is only 21 million, so what? There's a limited supply of shit. Do you want to buy that? And the funny thing also, they keep saying this about 21 million coins. I mean, what is a coin? One coin apparently can be divided by 100 million satoshis or something like that. I mean, what's the difference of having 21 million coins that can be divided by 100 million times, or have 20, or one coin that can be divided 21 billion times? I mean, that's actually, at the end of the day, that's the limit. It's not like, oh, there's only 21 million coins lying around there. No, I mean, they can be as fractional up to 100 millionth of a coin. So in a sense, it's kind of false, but it sounds good that there's. I mean, it's kind of like, there's only one cake here for everyone to eat, but you can actually divide the cake by 100 million times, and it tastes the same. Since it's valuation really at the end of the day that dictates things. So I mean, it doesn't matter how many bites there is if it's the same thing in a sense. I mean, a cake, it's actually finite in the sense that you have, if you divide a cake by 100 million times, the slices are obviously smaller, but that doesn't necessarily translate to Bitcoin, since it's just, price per Satoshi in the end anyway. Doesn't matter how many coins there are, or not. It's like it's the market cap itself, because there is not only 21 million coins that can be divided. The 21 million coins can be divided by 100 million times. So that's kind of interesting aspect of it. I think, at least. Anyway, look at the markets. Gold futures above $3,000. I mean, it's just crazy. Now we start to think about 4,000, whatever. Silver's doing. I mean, really holding in there. Copper is actually. I mean, that's really. It's more of a stealth run, I guess. But that's the same thing with silver and any metal or any asset, really. Unless it's going straight up, people don't really care as much. Because, I mean, this is... Oh, sorry about my computer is so laggy. I think it's because I have like 400 tabs up. I mean it's kind of, zigzagging, and sure, it's not an actual all-time high yet. But, like, this is obviously not that bad of a price. I mean, I guess one can draw resistances wherever you want, but yeah, I mean, who knows? Maybe, like I said a while back, maybe copper is where gold was at 2000, and once this breaks, maybe copper goes up 50% like gold has done. I don't see any like euphoria in the copper juniors, at least. I mean, there's some of the at least well, I guess early stage exploration or early stage exploration plays. I mean, I'm not seeing any copper FOMO in them, at least. And of course, they don't really have copper, but obviously, I mean, it means if they find something and the copper price is better, it means, I mean, the price kind of gets jacked up. So in a sense, it should be influenced by copper, but in a sense it shouldn't, because they don't really have much copper yet. But I was just gonna say, like, that's why I have no problem owning copper juniors as well, because, like, I mean, they're not pricing in the world. The difference being that the gold projects actually are worth a fortune today, whereas, like, yes, if you find a world-class copper deposit or have one, it's going to be worth a lot today. But if you have a tier 3 copper deposit, I don't think it's worth that much at this copper price. Not as much as a tier 3 project in gold is worth at $3,000 gold, at least. Kind of on that note, saw this today. Agnico Eagle announces investment in Collective Mining. Collective Mining is the gold explorer in Colombia, of all places. And if you listen to Agnico Eagle's presentation, interviews, and all that, and I mean, the theme for Agnico Eagle typically has been that they stick to the best jurisdictions, the premium jurisdictions, and they have also had premium valuations relative to, I mean, they're the highest market cap company. They're not the highest, biggest gold producer, but they, are known for quality, safe jurisdictions, gets a premium, best assets gets a premium, and all that. So I just found it interesting. It's like, yes, I've seen them. I think they're involved in ATEX. That's in, what is that, Peru or Chile? Is it Argentina? No, I don't think Argentina, but one of the South American companies, Pierre Lassonde backed. So they are, I think, an investor in that. But you don't usually see them in, I mean, doing a lot of stuff in the tier 2, let alone tier 3 jurisdictions. So I see this as I mean, it's quite interesting. Obviously, Agnico Eagle is aggressive. We've seen them take some stakes in some other juniors. I don't remember on the top of my head recent ones, but like, they're out there wheeling and dealing in a sense. Sure, they have a shit ton of cash to actually do that with. But I think this is just a sign that Agnico is more aggressive than maybe the other gold majors. And it has served Agnico Eagle well, because, okay, they're very good operators. they seem to have an eye for, let's say, tier 1 deposit or projects with tier 1 potential, all that, and they can run them better than most gold majors. So to see them having slingshot to top of the line, highest market cap gold company in the world, and they're still out there being aggressive. I mean, one would think that sends a signal to, Barrick, who hasn't done shit basically in I don't know how long. I mean, they bet everything on their Rico Dick asset in, where is it? Pakistan, I think, the copper gold porphyry. So, I mean, they went out hunting for copper projects basically when Agnico was, and some other companies, I guess, were buying up gold assets, and now gold is at 3,000 and Agnico passed Barrick. Well, they passed them quite a while ago. So I just find it interesting. Obviously, I don't think even Agnico could have necessarily predicted that gold would be trading at $3,000 today. But they kind of stuck to their guns. It's like, gold is what we do best. We're going to be aggressive. We want to grow. We want to, basically, I mean, we want to expand, and they have expanded. They bought Canadian Malartic, they bought Detour, they bought Kirkland Lake, yada yada yada. Now they're investing in juniors and stuff like that, and even actually copper juniors, and even kind of nickel zinc juniors. I mean, they're in Canada Nickel, I think they're invested in. They're invested in Foreign Mining, which is a BMS play. So anything that's kind of large and preferably in a tier 1 jurisdiction, they seem to be okay with. They're not gun shy. They're not like, oh, let's see what happens, yada yada yada. We get burned so much in 2011, so we don't really have the mandate to be aggressive, and we don't want to look foolish. These guys are, full steam ahead, I was gonna say, and especially in this case, I mean, for Agnico Eagle to invest, I mean, it's not like they're betting the farm on it. I mean, even for Agnico, this is not that much. They haven't acquired it. And as they say, Agnico Eagle continues to assess the project's strong geological potential as well as jurisdiction. So they're kind of getting a foothold. But to see them doing that in Colombia, which some people you talk to, that's a no-go area. I mean, this is probably one of the better places in Colombia. That's what I kind of, if I understand it correctly, it's very regional or local even. But I know some who don't really touch Colombia. Someone said, I think it was Paul Harris, who's like, I mean, how can you be in Colombia if you can't build any mines? Maybe you can in some places. But my point is, I think this just goes to show how bare the cupboards are when it comes to large gold projects. That Agnico, of all majors, are making an investment in Colombia, which certainly does not have a jurisdictional premium and is not seen as a good jurisdiction. But with that said, if this ends up being a tier 1 deposit, tier 1 project, and they are actually in a place in Colombia where you can get, where the locals won't kill you, you can actually build it, then it kind of makes sense. Because that's the thing as well. It's like, I mean, it's not like the tier 1 jurisdictions don't have potential. There's still not many tier 1 deposits that are being found in Western jurisdictions, or anywhere else for that matter. And if they are in a tier 1 jurisdiction, how easy it is to actually be able to mine it. I mean, that's what Agnico is about. They're a gold miner. They're not necessarily a gold speculator. So even if it's Colombia, if you're in an area where you can actually get a mine built, and it's a, let's say, tier 1 mine, and the gold prices are around this level, who knows? Maybe you have a 2-year payback, and after that you're free rolling. So I mean, how much risk is it? But if it were, whatever. I mean, you can take even Snowline in the sense that, I mean, when will when will the Valley deposit actually be put into production? I mean, it's a world-class asset, hands down, and they also have a huge land package. So I mean, you could just take it over, and it's like, hey, I mean, if we get a mine going here in 10 years, I mean, that's going to basically secure the future of our gold mining company, or a large part of it. So yes, that's also obviously a bet one could make, but at the same time, it's like time is money. If you can get this going in a few years instead of 10 to 15 years, I mean, that's obviously a kind of a big deal, because the gold price is 3,000 now, and the margins are 50% now. We don't know what the margins are going to be in 15 years, for example. So yeah, I take it that this as a sign, just cementing basically. It's like if you find something really good in a tier 1 jurisdiction, in an area that's like can actually get built, I think that's almost priceless today, because I don't think Agnico loves Colombia, if you know what I mean. I just think that there's simply not that many very large projects, and in a sense, if they think, hey, collective mining looks pretty cheap still, I mean, they're kind of an investor also, in a sense. That's, hey, oh, this looks like it could be worth a lot more. Let's get a foothold in here. If we really like it, we'll buy it, and we will have, I don't know how much in terms of percentage they. Oh, 40. I mean, then whether they have a 14.99% discount. You know what I mean? This is kind of interesting. I love all the Druckenmiller stories. So as he points out here, the main thing Druck learned from sources is that position sizing is 70 to 80% of the game. Purportedly, George Soros made money on fewer than 30% of his trades, and that alone is worth letting settle in a bit, and he's one of the greatest investors of our times. What does that mean? It means that he made a lot of investments that lost money. They probably did not lose much money, and when he did make money, made a lot of money, but both by letting a lot of money, both by betting a lot of money and by letting it run simultaneously. That I thought was really interesting lesson. So I mean, how I've talked about this before, how dumb it is when you see people out there, it's like, ridiculing every high risk, high reward story that doesn't pan out. Like, yes, you invest in a 10 million market cap company, they have a big target. If that doesn't turn into a 50 bagger, you're a moron, basically. No, I mean, that's the thing, and it also goes back to the idea that if you and I have to do a separate video about this, maybe I talked about this, but I mean, it's like the worst you can do is have a high risk, low reward strategy, basically. If you take high risk, you kind of have to play out the reward side. You can't take 90% risk, 90% chance of failure, and then it looks like success is happening, it's up 50%, and then you sell out. That 50% return is not going to pay for the 9 out of 10 juniors in the same position that gets cut in half. So you have to actually hold your nose, in a sense, in some cases, and actually see if the reward side plays out, because if you're taking high risks, it has to pay for a lot of other high risk that had the risk materialize. Opposite, of course, is true. If you have a case where it's like, I think this is very low risk, or pretty low risk, so not that big of a risk of actually permanently at least losing money, then it's okay if you take less profits, because let's say you're only expected to lose 40% in 20% of the time. If you can take 50% returns on 80% of the time the risk doesn't show up, for example, that's still going to be a plus EV play, because you're just going to lose whatever 30-40% in 20% of cases and make 50% in 80% of cases. And also, it's like, how do you actually make sure you get the reward side? If you put 15%, let's say 20% of your portfolio in a high risk, high reward situation, let's say going into assay results. It's not, you're not trading it or anything like that. You're actually going into a question being asked with the drill bit or whatever, and you're gonna stick around for the actual answer. I mean, the other version of that is more like you take a position in a liquid microcap junior and then pump the shit out of it before any assays are out, and then you sell out. I mean, that's completely different. That's obviously what most people do on Twitter, for example. They're not really want to stick around necessarily. They want to take the actual news risk, but if you can get people to buy it up, I mean, how risky is it in a sense? You know what I mean? But if you're gonna be there to ask, or you wait for the questions to be answered via the drill bit, for example, you're actually taking high risk. I mean, if you started off with like a 20% nosebleed position in a high risk juniors, like, and you have 5 other juniors, whatever, and they're down 30%, and this one junior, it kind of, they hit something, let's say it's up 100%. I mean, are you gonna stand having like 50% of your net worth in one high risk junior after they made hit on one hole? I don't think so. So how are you gonna really capture the reward side in that case? No, you're probably gonna have to sell out, because otherwise you won't be able to sleep at night. And at the same time, if you only have 5 positions and let's say the risk is actually 90% chance of failure, that doesn't really necessarily add up from a risk reward perspective, because you're going to be losing on 4 out of 5, making money on 1 out of 5. And again, since you can't really ride the reward side because the position is just, well, too big mentally, even in the case of initial success, and it goes up 100%, you can't play the reward side in practice. And it already started off with a bad risk reward perspective. If you think the actual odds are like 10% chance of significant success and you only have 5 stories, I mean, you're only expected to have a half success story in your portfolio in that case, which is basically you're flipping a coin if you will have one. And again, then if they actually make it, you can't really play the reward side that well, because it's just unsustainable to have half your net worth in a drill play, for example, after one hole. So by definition, again, I've talked about this before, I mean, a strategy has to make sense from theory on paper, but it also has to translate. That's why you have to kind of know yourself. You have to fast forward the tape. Okay, on paper this sounds great. This story seems great, or this strategy seems great. This diversification or position sizing seems great. Then you have to ask yourself, okay, if I made sure it actually makes sense from a risk-reward perspective, can I actually follow this in reality? Because if you can't follow it, doesn't matter how good the strategy is on paper. Because in practice, you're not following that strategy because of psychological reasons. Anyway, District Metals, I was at the bell ringing event last Wednesday? Yeah, I think so. And it's kind of interesting here. I mean, today, for example, there was District Metals was in the news, and they mentioned with support from major investors such as the Landin family. Obviously, that's gonna turn some heads in Sweden. I mean, it was up 17% in Sweden today, and when it was up 17, I think District in Canada was up maybe 1% or something. So there seems, I haven't calculated what the actual Canadian equivalent prices in Sweden, but it does appear like it's dislocating in a sense. I think this was the day of the bell ringing, and you can see it's it really shot up for a while here in Sweden. It peaked out at 3.9, open at 2.7. So I mean, it was up around, I think, 42%. Got sold off, retreated a bit, and now it's climbing up again. But it's not exactly looking, I mean, that's not exactly what has happened in Canada. 1.2 million shares traded today. I think in Sweden it traded 148,000, so it's still a bigger market in Canada. But again, it's like, I mean, I'm gonna get to it later with first Nordic, obviously, but so yeah, I mean, there's obviously, in a sense, some dislocations, and one can look at leading edge materials, which has been more in Swedish news recently. I'm not 100% sure what actually kicked this off, but you can see that, I mean, it's something has happened in a sense. I mean, did nothing, and then boom, started to take off. And I've seen some news items regarding leading edge material in Swedish media. And like I've talked about, and it's up 12% today, for example. I mean, there's not too many mining companies in Sweden that are serious. And I talked to a friend, he said that, you know, he's seeing a lot of gold-related news, for example, in Sweden. Like, you know, oh, gold prices at new record highs, yada, yada, yada. And I think that shows up in Lundin Gold. I mean, Lundin Gold share, this is just for my broker Avanza. That's just one of the Swedish brokers. Owners at Avanza, 20,680 accounts. And you can see there's kind of, I mean, kind of gone parabolic last 3-4 months from 9,000 up to, I mean, it's double. So they've added 10,000 new shareholders only with this broker in Sweden. And you can see, I mean, the chart kind of, well, shows that as well. And it's one of the best performing gold stocks all around. And when Lundin Mining was now leaving Europe because they sold the Zinkgruvan and the Neves-Corvo mine in Portugal, I think it's Portugal or Spain. Zinkgruvan is located in Sweden. When they sold that to Boliden, they don't have any European operations anymore, but they stated that they're gonna have Lundin Mining shares still trading in Sweden because they have, you know, they see the value of the investment base. And the Swedish investment base, I mean, the Swedish market is doing very well. It's kind of at all-time highs. I read an article, or I watched a clip a few days ago. Apparently there had been record inflows into Swedish funds in February. So for some reason, and the Swedish krona had, I think, strengthened more against the dollar than any currency in the world or something a week ago, or maybe it was 2 weeks ago, I don't know actually. So I don't know exactly why, but Swedish market is doing very well. I mean, it's at all-time highs. And it's not overvalued even, I don't think. I think it's just robust. There seems to be somewhat of a mining/gold fever happening. And I asked a high up investment banker in Sweden about this. I asked him, it's like, why do you think Lundin Gold is seeing such a, you know, upward sloping chart and so many accounts in Swedish investors seems to be getting into it? And I asked him, like, straight up, it's like, I mean, is there something special, or do you think it's a bit of a gold fever? And he nodded his head and said, yeah, gold fever. That obviously brings me to First Nordic Metals, who is set to list in Sweden finally this week, and I expect there to be a bell ringing ceremony as well. So we might have, you know, I mean, that should get quite a few eyes on them. And if, I mean, I can just see, you know, Tosh standing there. It's like, yep, we have the largest gold deposit in all of Sweden in a time when people seeing, well, today, for example, with record high gold prices. So, I mean, you can, I mean, we just crossed $3,000, and that's obviously being bandied about in media and stuff. So it's like I can't come up with, better timing in a sense to list the by far, by orders of magnitude, largest gold deposit in Sweden, the only serious gold deposit in Sweden, the second largest gold deposit in the Nordics, a few days after gold hits $3,000. And there's an apparent kinda gold rush in, some kind of gold rush happening in Sweden. So I think this could be really exciting. I think there were around at least 100 accounts on Avanza that seems to have converted all their shares to Swedish stock exchange. So there might be actually some liquidity. And I know some people kind of complain that's like, the Swedish IPO was set at a discount to the Canadian market, but it's like, it was only a 1.5 million placement, something like that. And again, it's like it's not known in Sweden yet. And most people obviously, First Nordic had kind of the same amount of shareholders on Avanza, for example, as Barrick Gold has or Newmont has. So the ones that actually dare to go into the Swedes that dare to go and buy on Canadian exchanges, they're already in it in a sense. And then you have obviously the liquidity question mark. Because I converted quite a bit of shares. I think I converted like 60% of my shares to Swedish SDRs. But like, I would have problems selling my position on the Canadian exchange. And this is not, First Nordic has been quite liquid post-merger. Barsley Minerals here is like almost no trading by appointment. Merger happens, like interest seems to have kicked up a lot, and obviously there's probably going to be a bunch of legacy shareholders. Who knows, maybe some have actually given up on the sector completely already after 4 years bear market. They couldn't really sell anything in size. All of a sudden liquidity shows up, so they're like, screw this sector, I'm getting out regardless, I don't care about the company, yada yada yada. Which is absolutely not unheard of. And then, whatever warrants and stuff that gets churned in or that will have to churn through. So I think this could be really, really interesting. It's like people have asked me, District Metals, Swedish listing. I think this is a much, in a sense, a bit harder story to tell. It's, polymetallic, it's uranium, which still has a moratorium put on it, and when you see news items like we saw today in District Metals, they're kind of define the municipality's veto. Mining company aims for Swedish uranium in Sweden, but all political parties say no. So it's not like you read one of these articles like, whoa, man, clear skies ahead and all that. No, so it's definitely PR worthy. This is, it's up 17% today, for example. So like, it's PR, but it's not unequivalently like positive, if you know what I mean. It's like vetoes and all political parties say no, yada yada yada. They're working on obviously lifting moratorium, and from what I've heard, they might also remove the municipality's veto. That would obviously be a game changer in a sense, because if the state just, it's like, hey, we have to have some uranium, and there's also vanadium, whatever, potash, zinc, copper, nickel, and all of that stuff in these alum shales. Like all of those are on the critical minerals list, kinda, or most of them. They could simply like, well, this is gonna go ahead anyway. That's what they did with the graphite mine in the very northern parts of Sweden. That also had left-leaning municipality that didn't really give them the go-ahead, and then the state came in, first time ever, and said, no, you have to accept that there's going to be a mine here. So there's going to be a mine there. But it's not as clear-cut as First Nordic. It's like, it's gold. Gold is at $3,000. There's some kind of gold fever happening in Sweden. The king of gold, the project is the king of gold in all of Sweden. It has the world's largest gold mining company as a partner. I mean, it's like box after box after box after box. I mean, from a PR perspective, I think it's much, much easier to get people enticed in First Nordic than a polymetallic uranium deposit in Sweden. And plus, uranium is not that hot anymore. With that said, obviously, I mean, District Metals has kind of an infinite supply of a bunch of critical minerals. So, I mean, this might turn into a success story as well. But that also is predicated on the fact that the moratorium has to be lifted, and preferably the veto of the municipalities needs to go away. Because, I mean, I don't think you're going to change the minds of some left-leaning, municipality heads. Like, oh yeah, all of a sudden we're okay with not only, mining, but uranium mining to boot. So yeah, and of course here it's like, unlike, for example, where the weekend deposit is, it's like the municipalities around First Nordic are actually pro-mining. It's not just me saying that, because every company kind of says that. I mean, they've stated, they wrote to, there was another deposit that had a shitty mine plan, and some government agencies like, nope, this doesn't work. You can't have, you can't have a bunch of trucks going through 6 small villages or something. The heads of the 3 municipalities around Barsele protested and sent letters like, wanting the case to be, reopened, let's say. Why? Because they wanted the jobs, and they talked about, hey, we need gold, why not mine it here? So it's legitimately 3 pro-mining municipalities that triangulates and surrounds the Barsele and the Golan Belt. So you're not gonna, I mean, obviously there's gonna be some, some cuckoo head. I mean, some from the, whatever, nature reserve kind of guy that's always gonna be making some noise, but that comes with the territory of any mine, really. But it's like, you actually have, the locals want a mine there, and Northvolt just collapsed in the Skellefteå area. The largest bankruptcy in Swedish history. Up to 5,000 people, I think, lost their jobs in one single swoop. So if that region wanted a gold mine to be built there because of the job opportunity, what do you think? What do you think the narrative is going to be today? You know what I mean? And I actually wrote a shorter case over the weekend on First Nordic Metals, because my 70-page long one was maybe a bit much, just highlighting everything. It's like, I almost need to take a vacation, because I am absolutely going insane. If there was a Canadian junior, or a US junior, heck, even a, I don't know, Argentinian junior, a junior anywhere almost, not maybe anywhere, but it's like the amount of boxes that gets checked in First Nordic is just obscene. I mean, yeah, you can obviously read this yourself, but when I think about it, like, when it comes down to it, okay, so in my opinion, I think Barsele is right now a tier 2 deposit. It's like, it's at 3 million ounces already at $700 gold. It's at 2.4 at $1,300 gold. Yes, we don't own the whole thing yet, sure. Agnico Eagle is the operator, has done all the work over 10 years, including, I mean, all the drilling, geological understanding, metallurgy testing, hydrological studies, or archaeological studies were already done. I found it they were done in 2005 by a predecessor. Flora fauna studies. I mean, they obviously have already an idea. It's like they certainly sketched up, ideas where they would put, whatever, a plant and all of that. And obviously, in my opinion, they probably again, they've spent 10 years to prepare the locals, let's say, for a mine to be built there. And I was on a site visit, and it's like you're talking to them. It's like pretty much everyone is pro mining up there now. It's just that Agnico obviously haven't made that decision yet, because now Barsele, a tier 2 deposit, is kind of too small for Agnico. So that's why the Barsele deposit itself is in limbo. Agnico is blocking anyone else, obviously. And they haven't kind of made up their mind yet, I guess. But at the same time, again, this is a tier 2 deposit. It's the second largest in the Nordics. It should make a lot of money at today's gold prices. And for fun, because again, it's like I can't really figure out what is the mental hiccup in a sense. Yes, I guess I get that it's a sleeper story in the sense that it used to be very hot. It used to be it had a higher market cap back in 2017, 16, 17. When they had I don't know if they even had a resource back then. Oh, excuse me. Gold obviously at what? $1,300. It had a higher market cap than First Nordic has today, with its 100% owned land package and 100% owned targets, and gold being at $3,000, and the resource being at 2.4 million ounces at $1,300 gold. It's just none of that makes sense at all. So it's like I cannot. It's like it's driving me absolutely insane, because as you see here, for example, who's actually posting in this forum? It's like mostly me, I guess. Not guess. It is mostly me. It is mostly me. And look into any other shitco or whatever. Look at a hopium play at 30-40 million bucks that doesn't even have a resource, is working in some tier 2 or tier 3 jurisdiction. I bet there's more people talking about that. There's more people posting about that stock than First Nordic Metals. And it's like legitimately, I think, the best risk reward I have ever seen in a gold junior in like the last 10 years. I don't remember what kind of plays were around in 2015, 16, and I didn't know much about mining back then anyway. There's probably been instances where something might have been selling for whatever cash or cash levels, but at the same time gold price was not at 3,000 back then. No project made a lot of sense in the bear market of 2015. I mean, mines were going bankrupt. So if you count for that, this might be the best risk reward I have at least ever seen. And funny things, like if we're talking, there's so many aspects, but like I checked out the European electricity prices. This was probably a day ago or something. This is not including local VAT tax, but okay. So these are all the countries that at least were in whatever in the same agreement, etc., etc. I mean, you can kind of guess that these countries probably have the similar or maybe higher even electricity costs. This is cents per kilowatt hour. 677774222.82. Ireland at 40. There's one standout on the cheaper side. One single region in all of on this map. That's the SE2 area of Sweden. Minus 11 cents per kilowatt hour. Where do you think Barsele is located? In the SC2 region. Oh, is it close to the cheapest green hydropower electricity in all of Europe? Yeah, it's pretty close. There's literally a power line that runs over the deposit, and there's two others that run through the deposit. I mean, it's literally insane. It's like you hear a lot of industry experts or veterans, whatever, they're talking about, hey, you know, infrastructure is so important because development cost, operating cost, all of that, yada yada. It's like you cannot ask for a better, you cannot ask for a better where is it? Yeah, infrastructure. So here's the deposit, here's that power line, here's a highway, here's a railway, here's airports, here's other highways, yada yada yada. Now it's actually crazy. And what was I gonna say? It's actually driving me absolutely nuts because, okay, when you think about it. Oh, by the way, yes. As I said earlier, I talked to some people now and then. It's like, hey, you know, have you checked in First Nordic? I hate pitching people stocks, but I don't try to convince people in that sense because, like, hey, you know, yeah, I never want to feel like, you know, I'm especially somebody I, you know, it's like, oh, you gotta buy this, you gotta buy this, but it's like, I can pitch them the store, then it's obviously up to them to decide. Because in my opinion, it's like, again, I think this is maybe the best risk reward in the entire space. Anyway, that I know of, at least. I mean, I'm not saying it has the highest upside of any. I'm saying the risk reward. But anyways, like I've heard comments like one thought. He didn't even, he wasn't interested. I mean, he had provided no other details than it's in Sweden, and he thought it was a high risk, high cost jurisdiction, which is categorically false, especially where Barsele is located in Sweden. Pro mining jurisdictions, the Swedish Geological Survey put a national interest designation on the actual deposit. Pro mining municipalities surrounds it. So it's like, Sweden is like top 5 rule of law and all that, top 5 in, you know, lowest corruption. So on a state level, it's obviously one of the safest in the world. On a local level for Barsele, it's probably the most likely deposit to not run into any problems in, who knows, maybe in all of Nordics. That is, I mean, just to start with that, in a time when, like, actually having permits for being able to build something in the Western jurisdiction, that's like priceless. And one other person said, yeah, so this person, I think he used to be invested in Barsele Minerals, so I think he, you know, might be a bit bitter about that and don't want to, you know, have sold at a loss and then get in, you know, and not at the literal bottom, for example. And he argued, you know, I don't think it's going to be economic, it's too low grade. And of course, the response to that is that the current resource of 2.4 million ounces was done at $1,300 gold. It was done, using $1,300 gold means that it only included gold that is estimated to be economic at $1,300 gold price. Plus, Agnico optioned this project in 2015. It's not like it was already a discovery back then. It's not like the grades, for example, was a surprise to Agnico. It's actually, I think, the grades have gone up in you know, the later resources, let's say. So if they Agnico options it in 2015 when the gold price was $1,100-$1,200, to suggest that it would be economic at $3,000 gold price when a much lower grade and smaller mine is making money in the form of Björkdal to the east in the same region. Obviously that doesn't hold water. but it's at least interesting to see when I'm, as I'm going insane. It's like, why on earth are so few retail aware of this story? What are they not seeing? But again, I think it simply comes down to a lot of human psychology, that people see Sweden and then they don't really dig into it anymore. People see the grades and think that, oh, that's not interesting, despite the fact that there's quite a few examples of similar grade, even lower grade bulk mines making a lot of money. I mean, Detour Underground, I don't know if that's in operation, but Agnico's big Detour Underground and the Canadian Malartic Underground, they're all like 2 grams per ton or 1.8 grams per ton. Alamos Gold, obviously, with their Young Davidson mine, which is kind of the closest analog perhaps, that's at, I think, 2.1 grams per ton. They have, I think they've averaged like 1200 ASIC over the last, I don't know, 7 years or something. And that's an older mine, deeper mine, probably higher cost mine because it's in Canada. Higher tax rate, I think, yada yada yada. So it's like, none of that makes sense. But it doesn't matter because, like, obviously people vote with their feet. It doesn't have to make sense. So if people get hooked up on something, it's like, I mean, again, let's put it in Canada in that case. Then the guy that just saw Sweden and thought that was a high risk jurisdiction and a high cost jurisdiction, even though Sweden is a lower cost jurisdiction than Canada, he would probably, he might be buying in that case. And maybe 5,000 other people or 10, you know what I mean. So it's interesting. It's like, because again, there is obviously, I mean, you have to be aware. It's like, okay, if you're seeing something, you think it's so absurdly cheap. Am I missing something, or is the market missing something? So talking to other people that makes up the market, and you hear the arguments, that's like why they haven't really looked at First Nordic Metals. It just makes me even more convinced. It's like, yeah, it's just that nobody seems to get it yet. No, North America, there's a discount put on First Nordic, and nobody really cares about it because, again, you can look at any other shitco that doesn't have anywhere close to a tier 2 deposit, let alone a 100-kilometer land package with 8 multi-kilometer targets, and they still have more retail people enthusiastic about that case. And I mean, from a de-risking standpoint, it's like, we don't want to make mistakes, obviously, but it's like, okay, technical risk low. Why? Well, Agnico's done the work for 10 years. There's plenty of examples of a mine like this that are making money. Björkdal is making money right next door. This is a much better mine. Technical risk low, jurisdictional risk low on a state level and on a local level. Pro mining municipalities, yes, that's very uncommon in the West. Possibility of getting fully permitted for mining, very good. I mean, I've heard people, obviously, a bit of hyperbole. It's like, how likely do you think this Barcel is going to get permits? Like 100%. Obviously, it's not 100%. Nothing is 100%. But it's a sign just how, what the probability of this actually becoming a mine when, at a time when gold is at $3,000. I mean, it's not going to become a mine tomorrow, but you get my point. And the chart, who knows, I'm not a big chartist, but it's like, hey, it looks like, this might have broken out of a what is it? Like 8-year downtrend or something, maybe retested it just now when the actual, leg up is about to start. Who knows? I think so. I mean, and also, one thing I needed to talk about was, okay, exploration risk. It's like, okay, we know Pierre Lassonde said that 95% of the value is created via the drill bit, and he's the same person that says, give me free optionality and I'll make you a millionaire. Okay, how are those statements related to First Nordic? Well, First Nordic is has already started an up to a 30,000 meter drill campaign which is more than most juniors can say, right? I think they're drilling more than Rupert actually. So in the Nordics, I think for a junior, they're probably the most aggressive junior in the world of Nordics. And if you look around the space, how many juniors overall in all of Canada or all on the TSX V or TSX exchange are going to be drilling up to 30,000 meters fully funded today. I don't know. That's probably not a lot of juniors that are going to do that. So at face value, it has one of the largest drill campaigns of any junior around. And remarkably, I would say that the entire market cap is undervaluing the value of 45% of the multi-million ounce Barsle deposit. How many okay, so first of all, not many juniors have a 30,000 meter drill campaign going. Not a lot of juniors have targets as big as Harpsund, Nippas, or the Ida discovery, which is, I mean, that's already a discovery since they hit 22.5 meters, so 2.4 grams per ton, I think it was. 22.5, yeah, 2.4. So that's already in just 6 to 8 holes or whatever they drilled, they already made a discovery there. So that's a 4 to 5 kilometer long structure, and they'll be testing 3 kilometer of it, which obviously if they were to hit in some places there and already, I mean, yeah, that then that's quite a de-risking event. So my point here is that all this drilling is risk-free. If they miss on all those 30,000 meters, it does not change the fact that the Barsle deposit itself, 45% of it is worth a heck of a lot more than the 130 million market cap Canadian. So there you have the weird combination in that case of Pierre Lasson's, quotes, like if 95% of the value is done by via the drill bit. Hey, okay, that sounds like if I want value creation, I would want to see drilling. Sure, okay. Then you add the fact that, well, at face value, it's free optionality as well. How many 30,000 meter drill campaigns do you know out there that are kind of risk-free? So like, yeah, I don't know why it doesn't sink in. I do not understand it. Why not more people are, it's like, interested in one of the largest drill campaigns in the junior space, and you're not at face value even taking any risk on it. There's plenty of juniors, and I'm invested in a lot of them, that will be drilling maybe 5,000-10,000 meters and all of that. But there's a shit ton of risk in many of them. Some are pre-discovery, some are early stage, no guarantees that they'll hit anything. If they miss, they don't have anything. There's no margin of safety. There's not a lot of juniors out there where it's like, we get a Agnico Eagle operated project, a tier 2 deposit in a perfect jurisdiction, in a perfect place in that jurisdiction, lowest power cost in Europe, designated to be of national interest. Permitting should be easier than almost any other project. To get it fully permitted is easier than any other project in any Western jurisdiction, basically. No, it's just the most insane thing I have ever seen, and that's of course why, when I see that amount of quote risk-free upside, that there's 30,000 up to 30,000 meters of drilling coming, let's say just this year. Given how big the targets are, where they are, I mean, the Dragon Mining, Svartliden mine here, for example, that was 377,000 ounces produced. That says something about how low the threshold is. Ida is basically right next door. So if you find 400,000 ounces, you could ship that to the Dragon Mining plant. So that if you find a 400,000 ounce deposit here, that's going to be produced one day. Pretty sure about that. Botten Exploration, that's a 30,000 ounce mine. 9,000 ounces per year of production. That became a mine. A 30,000 ounces reserve deposit became a mine. So this area here basically has some of the absolute lowest threshold for success in the entire world, especially a tier 1 jurisdiction. So it's not like your snow line where you need to find 8 million ounces of gold, otherwise there's no way anybody's going to develop that. There's no way, even if you find 4 million ounces at the Valley deposit, too remote, too costly, not worth anything. Here you could find a tenth of that. Here you could find maybe a 100th of that, and theoretically that could get monetized. So you have an extremely low threshold for success, especially given that the Barsele hub here will basically be backstopping everything, because if you build a mill here, you don't need to build another mill anywhere else, necessarily at least. So you have some of the lowest possible threshold for success in terms of exploration success, plus one of the largest drill campaigns in the entire space, plus huge targets that will be drilled with multi-million ounce potential, and nobody thinks it's like, hey, maybe I should price some of that in. All being backstopped by the value of the Barsele deposit. I have never seen anything like it. And that's what gives me a sense. I mean, again, sometimes you have to ask yourself, am I crazy? No, I think since I'm a Swede, since I've spent months researching this, it's like I'm one of the few in the world, I think, who actually understands this case. And when I talk to NA investors, for example, they have no idea. They have absolutely no idea. So that's an edge, obviously. And yeah, that's what kind of, sometimes drives me insane. It's like, because when you've done the work, it's obvious to you. It's obvious to me. It's like, okay, all of what I just said, I think, makes perfect sense. Right? So it's like, well, how the heck do you get a 30,000 drill campaign for free? How do you get, because this is like legit tier 1 potential. This stretch of land here, as you can see, this is the Abitibi belt, 100-kilometer trend. You have quite a few mines along the way here, but this is owned by different operators. For example, Wesdome, Agnico Eagle, Hecla, Agnico, Falco, Agnico, Radisson, Probe, O3, Agnico, Eldorado, yada yada. So what if one company owned all of these? I'm not saying we're gonna find a Canadian Malartic and a La Ronde and whatever this is, or a Vasamac and a Lamac and a Goldex and a Marban and an O'Brien. I'm just saying there's obviously potential to find something, to find a few really big deposits in one company in the same belt with perfect infrastructure, to have a hub and spoke model, meaning that's obviously tier 1 potential. So how the fuck can you be allowed to buy tier 1 potential for free? Usually tier 1 potential comes with a shit ton of risk, in a sense. There's plenty of juniors that theoretically have tier 1 potential in a sense, but they don't even have a resource yet. They have a conceptual target. They might have an early discovery, and it's going to take, I don't know, X amount of dilution events and tens of millions of dollars to actually, prove that they have something worth mining. If they find something worth mining, it's going to take them 10 years to actually get it into production and do all the permitting and whatever. It's like all of that is already in place in Barsele and in First Nordic. If you would redo all the stuff that's been done, it would take you 10 years. Well, you could do some stuff quicker, I guess, but it's like for hydrological sampling, community relations, 10 years is 10 years. Unless you bribe everyone, or if you give everyone $1 million, maybe you can get everyone pro mining and in a week or something. But except unless you have that option, it's probably gonna maybe take time and think about where you would put everything. Yada yada yada. No, I'm. It's like sometimes it feels like I'm going insane. Cause like how? Yes, that's basically it's like how is this not syncing with anyone? It basically, I might sound like a douchebag, but it's like this just reinforces the idea that I think one could make money in this space forever. Because in my opinion, it should not be possible that such an at least if you spend time, and that's why I wrote these articles. Like, I mean, okay, if everybody's missing it, then I'll spend 70 pages explaining it and do one of these. And it's like, I don't think it's like I don't think it's not about that in a sense. I think you're working against preconceived notions. Again, it's like you're fighting against the fact that people don't know Sweden, so they see it as high risk because nobody likes uncertainty in a sense. But just knowing that you can actually find a story like this, you can explain it through 70 pages. You can. I mean, it's no secret that it's been Agnico that has been an operator, for example, for 10 years. That's no secret. You cannot ask for a company to do better work than Agnico. No junior will do it as good as Agnico. They've already done that. It's like the technical risk and whatever. That's already taken care of. How many juniors can say that? So from a de-risking standpoint, Barsele is extremely de-risked. From a potential perspective, First Nordic is absolutely hands down one of the highest blue sky potential for any gold junior in the sector. In a tier 1 jurisdiction, and that's what the gold majors typically want, and obviously gold majors love the idea of owning a continuous 100-kilometer land package with great infrastructure, so they could literally be, well, potentially mining for 50 to 100 years or whatever. All of that seems to be going right over the market's head. And yeah, again, find me another play where you get 30,000 meters of drilling across several multi-kilometer targets, and I'm not taking any risk on that. Give me a few examples of similar plays where it's like, even if I lose, I don't lose. If I win, I get it for free. I personally don't know one, at least. Yeah, I mean, I'm just gonna try to run through these. Magna Mining, I mean, not much news. I was at the, obviously met Magna up at PDAC. I think it's about to get kind of fun, and I mean, there's a lot of geopolitical stuff going on, obviously. I just, what was I gonna say? Yeah, I mean, nothing has really changed. This is one of the hands that, even though I'm not super enthusiastic right now on nickel, but it's like Rick Rule is talking more and more about, hey, what is the most out of favor kind of thing? Well, nickel sulfides. Well, Magna got plenty of that. They have a copper-rich mine already in operation, and copper is obviously close to $5, and could let loose any time. At any point in time, really. And they have just a bunch of projects. So it's like, my bet continues to be that I think Magna will be worth more a year from now than it is today. And 2 years from now, I think it will be worth even more. And I wouldn't be surprised to see some discoveries over the next few years. More mines get into production over the next few years. Maybe Canadian nickel and copper will have done even better by then. So yeah, I think I don't think you need to be a surgeon when it comes to a case like this. You have the best operators, huge skin in the game. Basically every decision they've made so far seems to be extremely smart. That's honestly kind of the best cases you can find, where you don't need to lie awake and it's like, oh, oh, I hope I don't wake up to a bad news release and find out there's no company anymore or something like that. I haven't seen them make a wrong step yet. They've just been stealing value, quote stealing value. They have the best Sudbury explorers on the team. They've literally mined these assets before, so yeah, I mean it's a unique story. I don't really expect to find another Magna. I mean, it's almost impossible. Where are you going to be picking up, multiple redevelopment ready projects in a tier 1 jurisdiction? I mean, you kind of can't redo it, actually. That's why it's so unique. So this is continues to be a staple in the hodl folio. So I'm not expecting a 10-bagger this year, but I don't expect to lose money from this price either. Eloro, thankfully, came out with some banger hits. 962 grams per ton over almost 10 meters within a zone of 34.5 meters grading 440. I mean, this is Bolivia, low-cost jurisdiction. 122 meters, yeah, I mean, it's like these are money makers, that's for sure. The Freaksio high-grade silver wells grading 50 grams per ton have been encountered, has increased significantly. Yeah, so confirmed import. So basically what I talked about before and what Quinton talked about before that, I was going to say that the snapshot resource, for example, was in a sense, it's just a snapshot resource, but it probably significantly underappreciated its case gap. So when they start drilling the areas with less drill intensity, which had less drill intensity, all of a sudden they're finding out, well, there's even more of this high-grade stuff than showed up in the MRE, for example. And obviously you're going to be making money on these kinds of hits. Not too much to say. I mean, I actually think this is gonna be a mine one day, and I wouldn't be surprised if it turns into one of these cases where it's like, okay, you make a mining operations, a pretty big mining operation starting on the high grade, whatever, and then it's like, well, 30, 40 years later it's still in production because it is a huge system and they haven't really flushed it out yet. I don't think it's going to be that hard to get permits or anything like that. Sure, I don't think maybe necessarily Eloro will be, well, if they do kind of a test mine and all that trial operation, they can be the one that actually start producing. So I'm not 100% sure yet how the pathway forward is going to be, in a sense where it's like, maybe it's like, it won't, let's say they don't get it big enough for like a major to, okay, we're not really we're not experienced or comfortable with Bolivia, but this is such a big deposit, such a good deposit that we're gonna take the bet. Or if they prove up something again like smaller, but it might higher grade, high payback, but maybe not big enough for a major to like take that leap. You know what I mean? Or they might, whatever, start a trial operation. It's like go that way. They risk it. Maybe other people open their eyes to it. Maybe, who knows? Maybe they get to actually, step by step grow themselves from that point. I don't exactly know how that's gonna play out, but these are some whammer holes. And if we look at, I mean, everything is kind of tradable nowadays, I guess. Well, what I mean by that is like there's so many moves that is just kind of traders. It has nothing to do really with the company. And you can obviously see here it's like, oh, I mean, I guess one could say, oh, okay, this is a box. It's in a trading range, right? There's kind of, I don't know, it looks like it's making a bottom trading range, and we've seen kind of consolidations before. I actually thought this was a consolidation for a move higher, but then they put out the MRE and all the ones that had already, because there's been a shit ton of people that have been bashing Eloro for years. So obviously, and that's why I try also not to really bash other companies really, because I want to be able to change my mind, and that's also hard when you're actually bullish a junior. It's hard to change your mind, if you know what I mean. So it's like when that came out, I mean, everybody kind of piled on. So you had this, I assume, it's like some stop loss selling, and the bashers just piled on, piled on, piled on. So it's like, yeah, I mean, there's a lot of stuff beyond fundamentals, I was gonna say, because I mean, first the narrative was that it's full of arsenic, and some very prominent posters on mining Twitter kept regurgitating that. I even wrote an article saying why I don't think that's the case, and it's turned out not to be the case. But it's not like there's going to be a big apology tour saying that, oh, okay, I was wrong, it wasn't full of arsenic. No, so it kind of did its damage in a sense. Got the mood sour, and then also, what was I gonna say? Then it was it was super low grade. I heard it's like, I mean, look at these results today. It's not super low grade, especially for Bolivia. Yeah, I mean, bits and pieces of everything I was gonna say. So I mean, if you just look at the news flow, you wouldn't have guessed that that's. I mean, if you look at this chart and you saw the news flow, you would think that I don't think you would believe that this chart goes with that news flow, if you know what I mean. Because this looks like everything was super great here and everything is absolute shit right now. Whereas like that's obviously not the case. But hey. So yeah, Cabral Gold, they also put out Cabral Gold trenches 20 meters, 3.6 grams per ton gold on surface at the Machiche main gold deposit QQ, Gold District, Brazil. RC drill results from Machiche main include 4 meters of yada. I mean, the current drilling and trenching program at Machiche main is aimed primarily at upgrading the inferred resource base within the near-surface gold and oxide zone indicated. These results confirm the presence of significant grades both with the near-surface gold and oxide material, as well as the underlying fresh primary intrusive material. The trench results in particular are significant because they confirm the presence of excellent grades within gold and oxide material surface. This bodes well for our efforts to upgrade the inferred resource. And Machiche main, as we work towards updating the results from the PFS study on an initial heap leach started operation previously released in October 2024. So I mean, I think nothing has really changed for Cabral in the sense that I think the hodl case in a sense is that gold is sky high. They have a way of getting these oxide blankets into production, and obviously, I mean, this is kind of beefing that up in a sense, and they're seeing, here's like 1 meter of 10 grams, 1 meter of 10 grams, 1 meter 7.3. To get even a small scale, low cost gold operation up and running, that let's say they have oxide blankets for whatever 10 years, to have that self-funding the exploration across the district, because it's a fat district and all these historic places are working, so there's gold shedding all over the place. So I have no doubt they're going to be finding more oxide blankets as well. So in a sense, that's like what everyone kinda would want, have a real, big land position, a lot of potential, drill baby drill, and it's self-funded, so it just grows without really actually needing to dilute. So I mean, that's kind of the longer term, like when they would get self-funded and could just basically grow from internal cash flow, then I think it could get really fun. What one can say is that obviously there's a lot of potential here. I mean, there's more gold shedding here than at Tocantinzinho, where G Mining put that mine in production. There's more gold shedding here, and they're now up to a $4 billion market cap. Not only on Tocantinzinho, of course, but they also purchased Union Gold. Still, yes, I would say high long-term growth potential here. Shorter-term goal, update the already outdated MRE on the oxide blankets, get that into production, which I don't think is going to be that hard. I mean, not high, that much in terms of capex. Gold prices are obviously very favorable, so if they added some debt to that, I don't think that would be a problem. I don't know how quickly they could make that money back, and pay it off. Goliath Resources, I talked about it at the time of this irrational dip, and I explained why I think it happened. And it bottomed out at 1.4. It's already up to 201. Thankfully, I was able to buy some of that dip. I mean, this again, it's like volatility is the dry man. Volatility is the poor man's dry powder. And again, you should always. The sign of knowing a case well is if volatility hits, big price movement. Let's say, I find it easier buying low than selling high. So let's take a big dip. Okay, you see the big dip. I don't know how much it went down. Let's say, one day it was down 27%, I think. Okay. So from top to bottom, actually like 50%. Okay, 50% retracement top to bottom. It's like, okay, read the news release. What in this news release suggests that Goliath was overvalued a week earlier by 50%? I couldn't find anything. I think the story is pretty much exactly intact. I think the results were kinda in line. Sure, I would wish them to have made some, drilled some even better holes in some of the other targets and made, whatever, bonanza discoveries and all that. But it's like, okay, is that enough to have it go down by 50%, and all of a sudden it's not a multi-million ounce gold system with potential to be a tier 1 project? It's like, no, I don't think so, so I'll buy some. Because it's a bad sign when you have no idea what you should be doing. And there are cases I actually don't fully know what to do. Usually that is when there's something to do with mining, it's like, which I have a hard time, wrapping my head around in a sense. That's why Lion 1 metals, for example, has been so hard, because it's like I cannot really tell how things are going, if you know what I mean. Because it is a startup mining operation, and I'm especially not a mining engineer. Exploration risk and psychology, that I can understand, but it's like when rubber is really hitting the road, which is like, well, either they make money or they don't make money. That's kind of an important thing. Then it doesn't really matter what the sentiment is, right? Which I talked about before. It's like you can ignore reality, but you can't ignore the effects of ignoring reality. And sometimes it's mostly just psychological or trading wise. And in this case, I don't remember all the reasons I thought this happened, but I think it was like maybe warrants exercise, plus shares coming free trading, plus it had a run up, plus it had a lot of weak hands, plus obviously traders are piling in, and I heard about naked short selling, to get the party rolling, end of the assay result season. So it's like there was like 8 or 10 different reasons I could see how this happened. And almost, not really any one of them had anything to do about the long-term potential of the project, the long-term value of the Goliath assets. So I simply didn't think the intrinsic value of everything Goliath has and everything they might have went down 50%. K2 is, this was a long time ago since I checked these guys out. But I talked to some people up at PDAC, and I actually remember they just closed the financing, not a big one, but pretty good terms. Like, I think half a warrant maybe. Half warrant strike, just 1 year, 100% higher. So that's quite a big high strike, and only 1 year all of that. So I mean, it's kind of aggressive in the sense that it's kind of, you didn't need to really pay the placement takers a lot of, potential free upside. You know what I mean? They didn't need much in terms of bribing or sweetener. And again, I should mention also, it's like with First Nordic, for example, when people talked about the Swedish placement and were whining about that, like that had no warrant, but it had no warrant, slight discount to the market, which I think makes sense. And I've talked to other like institutional players who deals with equity raises and stuff like that. I mean, much bigger than the mining space. Who said it's like they typically want to see a win-win. They want everyone to feel like they're winning, so they tend to not like IPO at a very high price, for example, because in that case maybe the ones that bought it's like they're buying a local top or something, and then they don't feel good about it, yada yada. Plus, in this case, I mean, obviously the liquidity thing in Sweden, since it's an IPO again, but no warrants. So anyway, K2 Gold, yes. The big thing, I mean, they've had. I remember when they got the Mojave project. I think I was invested at that time because I really liked the project. Then it got stalled for ages and ages, and then I think they went back to the Yukon or something. I don't remember what the project name was, but it's like the Discovery Group guys, so it's no slouches. But obviously, I mean, you can tell from just, I mean, scrolling down the presentation. So it's like, okay, what's the first project that comes up? Well, the Mojave project. Before then, it was it a SI? Yeah, the Wells project. That's one I remember. It's like, I mean, they had some pretty good hits actually, but I think it was up in Tentina Gold Belt, Yukon. A bit expensive to work in, yada yada. Threshold for success is a bit higher. Again, going back to the beauty of First Nordic, where the threshold for success is super low. Anyway, now it obviously looks, from what I've heard, and as we can see in this presentation, the Mojave is the first project to be shown. So that's the company saying this is what we are most excited about. One of the best oxide gold intercepts in southwestern USA over the past decades, 86.9 meters, 4 grams per ton. Host to multiple tier 1 projects, pretty big land package, high grade surface samples, hey and how. Multiple target areas, gold. I mean, there's a lot of stuff going on here. I mean, it kind of, you would get the sense that it was a really small land package because you see so many targets kind of stuck together. But I mean, this scale is pretty robust. I mean, this is like 6 kilometers. So, I mean, given the pedigree of the people involved, if they're saying host to multiple tier 1 targets, I mean, I don't think that's pure hyperbole, if you know what I mean. I don't excuse me. I don't think that's pure hyperbole. I think they actually think this is a really good project with a lot of potential, and thankfully, I mean, they kind of shown that it already has quite some grade and width potential. Obviously in California, which is, I mean, why it's actually been I don't know if it was community thing or something, not 100% sure. Anyway, here you can see historic workings, so there's been mines all over the place, historic mines, historic workings here as well. So I mean, something, I guess it came from maybe the same system, so I guess just the overall footprint of stuff is suggesting that whatever happened here might have been quite a big event or events. Here's some drill intercepts, grab samples, looks good, looks good. I'm not gonna go into details, high copper, yada yada. So I think, what's the plan here, do they say? Proposed phase 2 drill plan objective. 30 drill pads to be tested, 4 holes per pad, reactivating 2.7 miles of pre-existing exploration roads. So they plan to drill 120 holes, it looks like. That's not too bad, right? I mean, if you test, I mean, it's not going to be 30 targets, I guess, but if you do proper testing like this, I mean, if they can test a few, as they call it, tier 1 targets, that could get quite fun. No guarantee, of course. The stock looks pretty tight. Good people involved. I think it could get some traction if they're able to replicate some of the very good holds, for example. And again, going back to the first Nordic thing, here I'm actually taking risk. It's not a huge position. It's not actually a big one even, but I bought some. Because, yeah, I mean, I don't think these guys can be that off. It's not a guarantee, of course, but I remember when they drilled some of these holes, I think, which were obviously very impressive. Yeah, so I guess there's been, yes, like, let's say since 2023, it's kind of been stuck, I guess. But that's, I think, that's what's expected to Q2. Permits for work program goes live. So I think the case now is that they should, but don't have it, but should get the go ahead to actually explore here. I don't know if that's because, you know, Trump has made it easier or whatever, but hey, maybe that has helped. So obviously you're taking actual risk here because they do not have a deposit. You're taking risk that they won't find anything. And the reward is if they find anything, right? Oh yeah, just lastly, excuse me, this is part of the hodl folio. Southern Cross, I mean, formerly known as Mawson Gold. I listened to a Brent Cook presentation where he outlines, I mean, he considered this to be a tier 1 project. I think they're ramping up to 8 drill rigs down in Australia. High grade gold antimony. Antimony is obviously very hot right now. So I just took a look and it's like, I actually find this quite interesting. Again, from a, I don't necessarily use this to, you know, again, trade or whatever, but it's like, I'm not blind. I can see that, like, there's nothing magical about whatever 3.5, 3.6, but you can see it's like it's gotten stuck here. So for some reason there's a bunch of traders or profit takers, whatever, that has made the share price just consolidate under this level. And I actually like to, I think these are side trend lines. I mean, I look at them now and then, and actually I think this is the one of few things I actually, you know, kind of look at and sometimes at least influences my judgment in a sense. I mean, if I think there might be a big move coming. Not that I pick companies based on that. If I didn't know anything about Southern Cross and I saw this, I wouldn't buy it, for example. But it's like, okay, we see where we are here. It's like going back, zooming out. It's like, okay, it's going back to support slash, yeah, I guess support zones that are turned into resistance all the way back in 2011. I have no idea what kind of company it was back then. But I think I don't, and again, I'm not a professional trader, but I wouldn't be surprised that literally ancient support zones is also factoring in that there's some trading magic happening right now that keeps a lid on this. But my point is, it looks to me, well, if they're ramping up to 8 rigs, for example, Brent Cook likes it. He's very picky with projects. So this is probably a very, very good deposit that's probably going to become a mine, probably going to become a good mine. And again, at today's gold price, I think the market cap is 800 million or something, but they have a real multi-million ounce high margin potential, which could be, I guess, worth a couple of billions at least. So, knowing that, and where gold is right now, if I had to guess, I think this is a coil spring. Since they're ramping up the amount of drill rigs, it means that the story is about to get probably more exciting, not less exciting. And 8 drill rigs might create quite some news over the next, 12 months, let's say. So, if we jump ahead a year, do I think that the market will put a lower value on Mawson or Southern Cross than it does today? Now, I mean, with 8 drill rigs, you might have actually maybe increased the value by quite a bit, and maybe gold price is at 3,500 by then. So, if I had to guess, I think this resistance here is gonna give away, because I think the deposit is gonna the project is gonna become worth more and more over the coming 12 to 18 months or whatever. And then this RSI thing here will break, and this resistance here will break, and that might, instead of having traders sell here, that might get traders in. So it might exaggerate the move when it happens. I mean, you see it all the time. Same with Snowline Gold, actually. Maybe I actually already talked about this. Why can't I find the Canadian ticker? So if we take Snowline Gold, was there anything magical about, say, this area here? It's like the $6 range. No, there was nothing magical. Was there anything magical about whatever? Let's say, yeah, okay, that's not perfect, but I hope you get my idea. No, there was nothing magical about $6. The deposit kept on getting better, getting more de-risked. Gold price kept on going up. Snowline was stuck anyway, and it's like, for a project that, let's say, gets more and more de-risked, I mean, these are not small moves. 37% down without anything bad happening. 64% up without anything, I mean, surprisingly good happening, if you know what I mean. I think the project was kind of the same over this period, getting more de-risked if anything. Still, you have absolutely huge moves. Okay, what happened when it actually broke? Okay, went up, back tested, swoosh. Did the Snowline, I mean, I don't know how much in market cap this is, but did it add 300 whatever million in value all of a sudden? I mean, the results have been good and all that, but I don't think it was really that much of a shocker. No, I think it just goes down to market. Market is, I mean, again, it's like traders. Okay, the short keeps ignoring the fact that the project gets more de-risked and more de-risked. Sooner or later, enough buying, well, I mean, it's kind of becomes unsustainably cheap in a sense, goes up, and then all of a sudden the traders that were selling this, whatever, they have to either buy back because they might have been short, or new traders come in because it broke through. So I wouldn't be super surprised if something happened in Mawson to that effect. And it again just goes to show that the market is a joke a lot of the time. It's like there's no reason why Snowland shouldn't have broken out of $6 really. I mean, there was nothing magical. It just happened, and then the traders take care of the rest and all that. And of course, that's the beauty if you're, in a sense, a value investor. You know, if you're front running news releases 12 months from now or something, it's like see the future early. So every time, if you thought Snowland was worth whatever this much for the last year or two, anytime these resistances came and that led to selling and momentum selling, and you know, everyone else who thought it was going to go through and they were going to make money, so they sell when they think they have no idea what they're buying, so they're just selling when the momentum goes down. If you have a fixed idea, it's like, I actually think this project is worth maybe this much right now, in a year it's going to be worth this much or something, so you're looking at the delta at all times. So you're using the fact that the traders are keeping this down and getting some momentum to the downside going, so you're buying the future at cheaper prices here, cheaper prices there, cheaper prices there, etc., etc. So yes, for some time you might not make much money, but at the end, if you're right, like buys from here, that's 97%, this dip 70%, 76, 70, 67, 100%, whereas like traders were making maybe 10, 20% on super small trading positions now and then. But if you had conviction, you were like maybe adding in size, whatever, and then, I mean, yeah. So, and today you would have obviously all-time high position value if you didn't sell. Meanwhile, you have no idea how many people just traded their any gains away. It's like when it's the same with Bitcoin. Like that study that came out, and it's like, oh, even at the all-time highs, 70% or something had lost money on Bitcoin. That kind of says it all. Everybody's so greedy, trying to get the right move in any time frame, especially short time frame, that when an asset like this, that everybody keeps saying the Bitcoin maxes, never sell, never sell, never sell. That's not going to stop people from trying to. I mean, good returns are not enough. So they're going to try to make the perfect trades at all times. So even up here, vast majority of people actually had lost money on Bitcoin. And it's like, really, take Great Bear or any one of those really success stories. It's like, honestly, I mean, the people that made a lot of money, they were not trading those success stories. That I'm pretty sure. I bet a lot of money that the insiders probably made most out of anyone, not just in monetary, but it's like in percentage-wise terms, because they couldn't really sell, I guess. And yeah, they made a shit ton, and that changed their lives. They simply refused to trade it. They just made a discovery hole and held their nose for 5 years, and then walked out with a 40 bagger. But that's not enough for most people. It's like, I mean, look at Twitter on any given day. All the talk is about what stock is probably gonna move soon. Whereas like myself, in the case of, I mean, like First Nordic, I just am going more and more insane about, you know, I mean, how basically how it seems that not everybody's missing it, of course, but like yeah, I'm like, okay, I'm pretty sure I'm gonna make money on First Nordic, maybe a lot of money on First Nordic. Exquisite risk reward, and almost no retail seems to share that opinion at all. They're, you know, busy buying some shit junior silver co because they think the pump is right around the corner. Where it's like, hey, I mean, I can't pass up if I get 30,000 meters of drilling for risk free. Sign me up, you know. Anyway, thanks for listening. Consider me biased. I own shares of all companies I mentioned, I think. Some are banner sponsors, twice biased. Not investment advice. I don't share your profits or your losses. Assume I might buy or sell any share at any point in time. There's no reason to buy any stock because I like it or sell any stock because I don't like it. Without conviction, you're gonna end up, buying high, selling low anyway. So I mean, it's just, yeah, that's really not a good idea. You really have to understand why you bought it. You have to understand why you should continue to hold it, why you should sell it, and all of that. Because otherwise, yeah, soon as there's that's the thing. It's like you have to be arrogant in a sense. It's like you kind of have to think that the market is always wrong until you don't think it's wrong. Because the thing is, like, sometimes it takes quite a while for the market to agree that you're right. And I mean, you could say exactly the same for like Snowline, for example. If you think, hey, this should be $1 billion plus, and you keep seeing those resistance bounces, and it's like, okay, still think this is $1 billion plus easy. It might take months or whatever for that to resolve itself and until you look actually right. But if you had high conviction, you probably didn't have a super low position size, and then you made a good amount of money. Because let's face it, there's plenty of people on Twitter that's gonna maybe I could say pretend that they're always killing it, whatever. I mean, some of the people that might have actually good returns, whatever, in the last X amount of years. I mean, most are really small time traders in a sense. They don't really have a scalable strategy. If you're only good at flipping low liquidity juniors, what are you gonna do if when you actually end up with a lot of money? No, I mean, it's not like the Lundins can sit and flip resource stocks all day. No, they can basically buy once and sell once. It's the greed that gets us. You're seeing someone's like, oh, everybody's making money, like you see in the crypto space, even though most people are not making money. Most people have lost money. Most people have lost a shit ton of money just in the last 3 months in the meme coins. But on Twitter, it looks like nobody's actually losing at any point in time, really. And don't forget, like, the market averages 9% per year. If you could average 30% per year over a 10-year period, for example, that's a shit ton of money. It's when you try to get like 300% every year. I think that's when you really end up shooting yourself in the foot, because you're gonna be looking at trying to catch every one of these. And there's gonna be a lot of examples when you thought this was gonna happen, but it actually does not happen. Anyway, thanks for listening. I hope you have a good day. Bye now.